We are still seeing a good level of FOMO in Bitcoin at the moment. In this video, we're going to be jumping down into Bitcoin's daily charts, taking a look at what's been going on from a price action, as well as taking a look at the on-chain metrics to see who is buying and who is selling. As I get into this video, if you find it useful and informative, smash that like button. Really do appreciate that. If you are new to the channel, why not subscribe? Tap in the bell, selecting all the notifications. You will stay up to date with all the video updates that we do here. If you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So go ahead and check it out. Let's jump right down into this one, right? So what we'll do is we'll start off by taking a look at the on-chain metrics, then jumping down into the charts and take a look at what's going on there. So we'll start up here, usual kind of stuff. Top right-hand corner here, we have the inflows for Bitcoin going onto the exchanges, the outflows of Bitcoin going onto the off the exchanges, and then the difference between those two numbers, right? So inflows since the 1st of January 2023, 2.6219 million. Coming off the exchanges since the 1st of January 2023 is 2.5958 million. That means that there's a difference of 26,130 Bitcoin going onto the exchanges more than has been coming off. So the supply is outpacing that of the demand. If we think of the Bitcoin going onto the exchanges being made available to be purchased or to be sold, and then that is our supply line. And if we think about the Bitcoin coming off the exchanges, that's a demand soaking up that supply line. So at the moment, we have a bearish situation where the supply is outpacing that of the demand. And in a bull market, what you really want to do is you want to see the demand outpacing that of the supply. However, we are talking very small numbers here, as 26,000 Bitcoin really is not a lot of Bitcoin. So on a grander scale of things, I'd say it's a very neutral market, but it's kind of just, teetering around, which brings us to the question. If retail investors are really significantly FOMOing into the market and we're at a pretty neutral position, then does that mean that large institutional investors have been selling their Bitcoin to the retail investor? After all, there's always a buyer and there's always a seller. So we have to consider those things. Now, we can take a look at the line graph and we can see just how much has been kind of bouncing around a little bit. We had a small uptick here yesterday after going down on the weekend. Pretty typical, nothing too major. A little bit more coming off the exchanges than is going on yesterday. So 23,000 goes on, 27,000 comes off. So nothing too major there to kind of talk about. Then it gets interesting when we start talking about the wallet counts and the number of wallets that have specific numbers of Bitcoin in them. So for example, a wallet that has over 0.01 Bitcoin, we call this Bitcoin dust. It's basically the most vulnerable retail investor, has a 9-to-5 job, has a little bit of savings they're trying to build into big Bitcoin because they believe in the future of Bitcoin, for example, or maybe they've been told that they should invest in it or whatever. But essentially, it's a small level investment. And unfortunately, these wallets have been growing quite a bit. And I want these guys to be really okay because I think they are the most vulnerable retail investors out there, right? And the ones that don't have a lot. And if they do lose this, it could be meaningful, right? So, and of course, that's just my speculation on kind of understanding why you might have a little bit more than 0.01. So there's 11,715,181 wallets that have over 0.01 Bitcoin in them. That was as of yesterday. And if I roll this back to here, right, February, it was 11,472,000, right? So there was kind of some stuff that was circulating around crypto Twitter saying that there was an extra 1 million wallets that was created in one day, right? And I can't see that unless it has less than 0.01 Bitcoin, right? And lots of people can come up with all these crazy ass numbers, but where's the evidence to back it up, right? How much Bitcoin do these extra 1 million wallets have? Because they're not in this data, and this data is tracking everything above 0.01 Bitcoin. So yeah, you can create 1 million wallets, but if they're empty, it's not good to anyone, right? It's the idea of making something look bullish without it actually being bullish. You see the same thing with some projects when they have their staking protocols, right? And they look at how many people or how many wallets are delegating. It's so great. You can create 1 million wallets delegating, one coin out of, a $1 trillion coin supply or whatever. It doesn't actually make it bullish if there are fake accounts that have been created up by bots. And unfortunately, there are services out there that do this. They create fake accounts, they create fake wallets, and then they create fake delegations. And so a lot of the metrics that we look at can sometimes be heavily manipulated by just people, bad actors in the space, right? So we want to be a little bit cautious, right? Here we can see and when we actually track the wealth level of the wallets, how many wallets there are and all that kind of stuff. Now, here we can see that we've had an uptick since February, right? So we've seen up here, we saw some selling occurring at this level. So basically when Bitcoin was about $22,000, then you saw some buying at $24,000, right? And this is typical retail investor: sell low, buy high, right? The opposite of what you should do. And then of course they're FOMOing it, right? FOMO, fear of missing out. Now, as we come up into higher retail size wallets, we can see the FOMO is strong with retail right now. Look at this. I mean, again, you have that typical kind of stuff as well, right? You can see that there's a little dip right here on Bitcoin Krill. This is a wallet that has over 0.1 Bitcoin in them, and you can see this little dip right here, right? They were at 4.2 million, 4,268,000, coming down to this dip here at 4,261,000, right? So it was only 7,000 wallets or less than that, about 7,000 wallets during this moment here, right? So what did they do? They sold at 22,000 and they bought at 24,000, right? And they're still FOMOing in right now. Same with our shrimps. The shrimps are people who have over 1 Bitcoin per wallet. The wallet counts up here, they started to decrease at $22,000. From 988,000 wallets down to 986,000 wallets, and then start buying again at around the $27,000. So they're basically they're basically selling low and buying high. Again, typical retail stuff, and you can see this across the board. Even over here with the dolphins, which are 10 Bitcoin or more, there were 156,000 of these, and they were selling at $24,000. And they've recently started buying again at $28,000. Again, typical retail investor kind of stuff. I'm not saying it's the same people, but you can kind of see when you just look at it from a wallet count point of view, how these wallets are they're so emotional in the way that they're reacting to price movements, that you can see the curve to this, right? They're really significantly FOMOing in. This is why a few videos ago I was talking about this potentially being one of the biggest bull traps of all time for Bitcoin, and that's because the level of FOMO right now is just off the charts, right? But yet it's not really founded from a solid and analytical point of view, right? There's a few people basically saying that the bull market has started and therefore creates a sense of urgency, right? You've got to try to catch that bottom. You're going to miss it. It's going to go to $100,000, $1 million or whatever, right? And just for the record, guys, if Bitcoin goes to $1 million, you're not going to want the dollar, right? You're not going to want to sell your Bitcoin for the dollars, because it's dollars. If it goes to $1 million, it's because the dollar isn't worth hardly anything, right? It's not worth it. Like the exchange rate from pound to dollar, you just wouldn't do it. It would make it'd be a pointless currency to be in. So you just wouldn't do it. So you don't really want hyperinflation in the US, because $1 million to you is just going to be worth like $27,000 now, right? What's the point? So anyway, nonetheless, we can see that the FOMO aspects of what is going on with retail. So if retail is buying, then someone's got to be selling their Bitcoin to them. And that's very obvious here when we start taking a look at the larger size wallets, the big money, the smart money, the institutional investor, the multimillionaire, the billionaire. Right? These are the people who are selling, and yet you've got retail investors buying. So what we have to understand here, and it's very, very basic in the way that I just approach this, let's keep it as simple as possible. If retail investors are buying and billionaires are selling, do we think that the billionaires are on the wrong side of this trade, or do we think that the retail investors are on the wrong side of the trade, right? Someone's making a mistake here. And the question becomes, is it going to be your institutional level investor, or is it going to be your retail investor? Now, history tells us that the retail don't know what they're doing. And we've just kind of demonstrated that by the fact that they are selling low and buying high, right? We can see that within the wallet counts and the way that the wallet counts are reacting to price movement. So we know that retail investors are over emotional. They overreact to price movements, whereas institutional level players, they are more analytical about how they approach things, and they don't mind taking losses on the short term for longer term gains, right? So what you tend to find is that they are hunting for liquidity, and they're selling into that liquidity on the assumption that the market is going to move heavily in the opposite direction at some point, so they can buy it all back at much cheaper rates. This is something that we've been doing during this bear market, where basically we're swing trading in and out of the market, on the way down, and institutional players are pretty much the same. Okay, and the reason that they're doing this is they're looking to accumulate a vast amount of Bitcoin over a long period of time. It's about not having short-term mindset, but a long-term mindset. So here we can see that our sharks investors have been heavily coming out since they made some fantastic trades. They were buying heavily back in December of 2022. Before the initial surge, right? When Bitcoin was $16,000, $17,000, these guys here with over 100 Bitcoin were buying heavy. I mean, buying very, very heavy. And then you can see that they started to come out of their positions. They're coming out, and they're selling to the retail investors who are FOMOing in, right? They bought it from the retail investors on the way down during FTX crash and all the fear that you're going down even deeper, right? And now they're selling it to the same retail investors who are now believing that they're in a bullish market, right? So again, they are showing you exactly what is going on. You just have to open your eyes to seeing exactly how this data is actually being presented to you and understand the psychology that sits behind it. Their objective is to grab as much of that money as possible, right? Our whale investors are very much the same. Okay, now the Kraken is a whole different beast in itself. Now, the whales are 1,000 Bitcoin per wallet or more, right? They can have anywhere between 1,000 and 21 million, right? Not that they'd have it all, but you get the idea. So there's 1,000 Bitcoin per wallet, and these guys, I'll show you the 365-day view, have been doing this, right? They've been coming out of their positions consistently. So they've been upticking a little bit at the moment, but again, I'm not convinced that this is a signal to the upside without first seeing retail investors coming out. If they want to be buying a substantial amount of Bitcoin, which they do at some point, then they're going to have retail investors sell that to them. They're not going to do that on the highs when they've been selling during this entire time. For example, in June, we saw a lot of influencers across various different social media saying that the bottom was in, okay? And during this time, I was saying it's very illogical for the bottom to be in when whale investors or billionaires are basically selling into the pump that precedes, right? That's basically saying the bottom is in, but I'm going to continue selling, right? Even though they can't possibly buy it back cheaper. That would be very illogical, right? And we see the same thing in November 2022 as well, right? FTX crashes, and what do we see? We see, again, whale investors basically just selling into the liquidity of people believing that the bottom is in. And again, it's illogical for these guys to be selling if they believe that they're going to be able to buy it back at a cheaper rate. And we can see that these guys have continued to go down into new lower lows during this bear market for the number of wallets, which means there's a continuation of selling pressure from this institutional level wallet. And you can see the small uptick right now. It isn't overly impressive, and I don't think we can get any major uptick until we see retail investors coming out. So in 2018, this is what happened. They basically traded sideways, and then they get an uptick only when our retail investors start to sell. Okay, so retail investors sell, and then whale investors were able to buy. Okay, the Kraken-sized wallet, well, the Kraken-sized wallet in 2018 did this, and they flooded the market with excess amounts of Bitcoin to bring in the actual bear market low. And where are we right now with the Kraken-sized wallet is here. They accumulate during the bear market, yet to flood the system with excess Bitcoin. In 2018, they accumulated during the bear market, waiting to flood that system. So ultimately where we sit right now is in a reasonably similar position. We just haven't seen the entire picture yet, right? We can see that institutional level investors, big smart money funds, are not coming into the space. They're coming out, and they're coming out at the expense of retail investors. And they can't come back in until retail investors are selling their Bitcoin back to them. And they're not going to do that, or these whales are not going to buy until they buy it back cheaper than they originally sold it. It would be the strategy that's been spoken about for decades. And it's not just a crypto space, obviously, that sees this. This happens all the time. That's why smart money concepts exist. So on that note, let's jump down into the charts, right? So smart money concepts here on our daily chart can see that we have got these imbalances in the order books, right? We can see that this move to the upside has been fueled by some irregularities. These irregularities, these imbalances, these fair value gaps are created from an unnatural order, okay, coming into the system. So for example, down at the bottom here, we have, and they call these institutional candles, right? And we can argue these are market makers, or we can argue that it's a big fund. But we can see from the wallet counts, if it's a big fund, it isn't coming off the exchanges. It's not going to cold storage. Therefore, I think it's probably just more manipulation from funds that are on exchanges. But looking at this, we can see that an order comes in for buying at the low side. And this gap gets left behind because there's insufficient sellers to sell to them. The price has to jump up to where the sellers are, which happens to be on the higher side of the gap. This means that there's no liquidity or very little liquidity in this area for the institutional investor. Now, typically what would happen here is that when one of these gaps occurs and there's insufficient liquidity, is the institutional investor or the smart money stops buying. And it stops buying because it wants to buy down here, right? But there's no liquidity. So it stops buying and waits for price and waits for the liquidity to come into the gap, then starts buying again. But that's not what we've seen here. We've seen here is a continuation of this push upwards, which is illogical for a smart fund. A smart fund is going to want to make sure that they get best bang for their buck, right? And so they wouldn't be continuing this push upwards. So this to me just looks like it's all designed to create FOMO, get retail investors to put money into the system, and essentially that liquidity can then be grabbed later and price will come all the way back down. Now, there could be black swan events, there could be all sorts of different things that can cause it. But in the simplest terms, there's a buyer, there's a seller, and when someone is providing liquidity, that is basically up for grabs for either party. So if you've got Bitcoin that you're looking to sell, that's liquidity. And if you've got USDT that you wanted to buy Bitcoin, that's also liquidity, right? So depending on which way you want to kind of flow this thing, could essentially be key. So when we have a lot of retail investors FOMOing in, that basically tells us that there's a lot of buying potential, and we're about to see reversal with Bitcoin that's going to be made available to be sold. Once, of course, that liquidity dries up, price only has one place to go. It's going to be down. Okay, so we're going to be really, really cautious about this. Now, on a positive note, we have had a change of character to the upside. That change of character is okay. I'm not concerned about that right at this moment in time, because it does indicate to us that we're going to have some kind of natural pullback before we can rally up. To break this now, we'd have to come way back down here. Possible, yes, and the black swan event would be the only way I think of that occurring at this stage. But anyway, theory does give us still the picture of a Z wave, basically 18,000 on the high side and 11,500 on the low side. So we know that those things are still possible. We can't kind of, park the idea of new lower lows completely off the grid. I still think there's something in the background. Chris kind of spoke about this on the podcast channel, talking about Tron, USDT, and potentially that being the black swan event next, in a very similar way that he was talking about FTX early stages, and some of the other things that have occurred in the space. So if you haven't checked that out, check out the podcast channel linked in the description below. Really interesting kind of stuff going on there. So from our data and our on-chart stuff, we're doing a few things that I find quite alarming. One, we kind of have ourselves up in a parallel kind of, well, not parallel channel, but higher highs and higher lows. And unfortunately, these have a tendency to break downwards. So I would be concerned about this. So keeping a close eye on how that plays out. Normally, if I zoom on over here, for example, and I grab hold of my parallel channels, what we tend to look for, right, is basically lower lows and lower highs. They have a tendency to break upwards, whereas when you go in the opposite direction and you have yourself higher highs and higher lows, they break downwards. Okay, and you can kind of see, you can draw these out as many times as you want, guys. You can see them over and over and over again. It's not a guarantee, but you can kind of see when you go down into lower highs and lower lows, you break upwards. And when you go higher high, higher low, you break downwards, right? And this is something that you can draw yourself. You can go into all your charts and you can kind of see them. In a bear market here, we've been doing a lot of higher highs, higher lows, funny enough. And a lot of people are saying, oh, look, we're bullish, we're going higher high, higher low. And unfortunately, they have a tendency, as I said, to break downwards. Whereas when you go lower low and lower high, you break upwards, right? So where are we right now? Well, we are in a position of a big macro, as you can kind of see here, big macro higher high, higher low situation. And that's why I think, along with all the on-chain metrics and the Elliott Wave theory and the smart money concept stuff, I think this is a big bull trap. And I think we're about to kind of get hit home. Now, as you can kind of see, this previous area that we've kind of tapped up into, this was a previous demand zone, has turned into a supply zone. We're getting hit back down hard from here. So it'll be interesting to kind of see what goes on next. But the daily chart is oversold now, so that could also feel a little bit more FOMO. We'll see how it all kind of pans out. Let me know your thoughts and comments down below. If you found this useful, subscribe and hit the like button, and I'll catch you all in the next one. We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.